Today, Eurozone annual inflation rate was revised lower to 5.2% in August 2023 from an initial estimate of 5.3%, marking the lowest reading since January 2022. The biggest upward pressure came from cost of services and followed by food, alcohol, and tobacco. Energy prices continued to fall, but at a much slower pace. In August, CPI went up 0.5%, slightly below estimates of 0.6%. ECB anticipates inflation to average 2.1% in 2025. Oil prices are headed for the fourth consecutive session of gains today, as new data from the U.S. Energy Information Administration showed that oil output from shale-producing regions is on track to fall in October. On the other hand, Saudi Aramco CEO Nasser yesterday lowered the company's long-term demand outlook, forecasting 110 million BPD by 2030, down from the last estimate of 125 million. The oil market experienced high volatility following Nasser's speech. Analysts from National Australia Bank comment that oil's ascent into overbought territory leaves the market vulnerable to a correction. The United Auto Workers Union has declared that strikes will commence in more plants if no serious progress is going to be made in talks with Ford, General Motors, and Stellantis. Treasury Secretary Janet Yellen stated it was premature to forecast the strike's impact on the economy, which would depend on how long the action lasted and what was affected. For now, the strikes have halted production at plants in Michigan, Ohio, and Missouri. Additionally, the disruption has fueled already present global chip demand concerns. Amid economic uncertainty in the U.S., Mike Wilson, Morgan Stanley's top U.S. equity strategist, has advised investors to focus on late-cycle stock sectors. Wilson suggests that investors should maintain a balanced portfolio until more concrete economic data is available, recommending sectors such as healthcare and consumer staples known for their defensive growth, coupled with late-cycle cyclicals like industrials and energy. As Phillip Capital Team, we wish you happy and healthy days.